Good morning, investors. Welcome back to the channel. It is Wednesday, January 7th, 2026, and we're gearing up for what looks like a pivotal session on Wall Street. If you're looking at the futures markets this morning, you're seeing a market that is essentially holding its breath. It's that classic midweek pause where the bulls and the bears are staring each other down, waiting for a catalyst. Yesterday, we saw some pretty choppy action. A lot of traders were sitting on their hands, positioning themselves ahead of the midweek data dumps. You know how it is. Nobody wants to be the first one to move when the data is uncertain. But today is all about execution. We have the Consumer Electronics Show, CES, firing on all cylinders in Las Vegas right now. That event is creating massive volatility in the semiconductor and hardware space, and we need to be ready for it. On top of that, we have key earnings whispers coming out of the industrial sector. These aren't just random numbers. They could set the tone for the entire Dow Jones Industrial Average for the rest of the month. In this video, we're breaking down the 4 biggest stories you absolutely need to know before the opening bell rings. We're covering the heavy hitters in tech that everyone is watching, but we're also digging deeper. We found a sleeping giant in the industrial sector, a company flying completely under the radar despite some massive news, and my favorite setup of the week, a stock trading under $4 that is showing a classic technical breakout pattern. So grab your coffee, sit back, and let's get into the charts. Let's start with the sector that is driving the bus right now, technology. Specifically, we're looking at the fallout from the keynote addresses happening at CES. The Consumer Electronics Show is always a spectacle, but this year, the market impact is real. The name on everyone's lips this morning is, of course, NVIDIA. Yesterday evening, we finally got the details on their latest consumer GPU lineup and, more importantly for us shareholders, their new industrial AI partnerships. The market reaction in the after hours was a bit mixed, which is exactly why this is our top story for the day ahead. Here is the reality of the situation. The sell the news event that the bears were hoping for? It didn't really materialize. The stock held its ground. Instead of a sell-off, we're seeing a rotation. Smart institutional money is looking beyond just the chip makers. They are looking at who supplies the power and the cooling for these massive new systems. This brings us to the day-ahead trade. You want to watch the sympathy plays today. We're looking at infrastructure companies like Vertiv Holdings, VRT, or Supermicro Computer. Think about it. When NVIDIA announces higher power draw for their next-gen Blackwell or Rubin architecture, the data centers can't just plug those into a standard wall outlet. They need upgrades. That is why these infrastructure stocks tend to catch a bid in the session immediately following a big NVIDIA announcement. Now a quick warning. If you're trading the Nasdaq 100 today, be very careful during the first 30 minutes. We expect an initial flush as retail traders react to the headlines, often the wrong way. That's the fake out. We're looking for institutional buying to step in after 10 a.m. if the key support levels hold. The AI narrative isn't over in 2026. It's just maturing. We aren't just buying hope anymore, we're buying earnings execution. Let's pivot over to the industrial sector. This is a sector that has been pretty quiet lately, flying under the radar while tech grabs all the headlines. But that silence is about to break, and you want to be positioned before it does. We're looking closely at General Electric Aerospace and the broader defense industrial complex this morning. With geopolitical tensions still simmering in the headlines, defense spending is projected to remain historically high through the first quarter of 2026. But the story for today isn't just about defense contracts, it's about the supply chain. We're seeing early data suggesting that raw material costs, specifically steel and titanium, are finally stabilizing. That is a huge deal for margins. For a giant like GE Aerospace or even a Caterpillar, when input costs go down, margin expansion is the name of the game. That goes straight to the bottom line. For the day ahead, I want you to keep an eye on the transports. The Dow Jones Transportation Average often leads the industrial average. It's an old-school signal, but it works. If we see strength in rails and logistics companies this morning, it is a green light for the broader industrial sector. My specific focus today, however, is on Deere & Company DE. Now, you might think of them as just tractors, but they've been integrating autonomous farming tech, which was actually featured heavily at CES this week. Believe it or not. When a tractor company starts trading like a tech company, you get a multiple expansion. That means investors are willing to pay more for the stock. Watch for volume spikes in the first hour. If DIR breaks its recent high, it could pull the whole sector up with it. Now let's talk about a story that isn't on the front page of the Wall Street Journal this morning, but it absolutely should be. We're looking at Rocket Lab, RKLB. While everyone is focused on the big tech giants, the space economy is quietly hitting a critical inflection point in early 2026. This isn't just about science fiction anymore, it's about business. Rocket Lab has a launch window opening up, but that's not actually the news. The real news is the contract backlog. Analysts have been slowly upgrading their price targets on this mid-cap player, citing their neutron rocket progress. This stock often flies under the radar because it's seen as speculative or risky. However, with the government defense contracts we just discussed in the previous segment, Rocket Lab is positioning itself as a prime acquisition target or a dominant standalone player. They are becoming the FedEx of space. Today, look for a break above recent resistance. The volume profile over the last 3 days suggests accumulation. That's a fancy way of saying the smart money is quietly buying while the retail crowd is distracted by CES headlines. This is a classic coil setup. When the coil tightens, the breakout tends to be explosive. Just keep in mind, space stocks can be volatile, so don't bet the farm, but the setup here is pristine. Alright, this is the segment you've been waiting for. We need a high-risk, high-reward play. I found a stock valued under $4 with the potential to break out. Today, I'm looking at VUZI Corporation, VUZI. VUZI specializes in smart glasses and augmented reality technology for enterprise. We're talking about practical uses like warehouses, medicine, and field service. Why are we talking about them today? Because CES is effectively their Super Bowl. This is the week they show off what they can do. Historically, small-cap hardware stocks like VUZI see increased volatility and volume during CES week. But here is the kicker. The stock has been beaten down for a long time. It's been compressing into a tight range under $4 for months. We're seeing news wires light up with rumors of a new OEM partnership for their waveguide technology. If they announce a deal with a major defense contractor or a logistics giant this week, the short squeeze potential here is massive. There are a lot of people betting against this stock, and good news sends them running to cover. Technically, we're looking for a high-volume break over the $3.50 mark. If it clears that level, there is very little resistance until $4. However, remember this is a small cap. Volatility cuts both ways. Keep your stops tight, don't get greedy, but definitely keep this ticker on your secondary monitor today. It could move fast. So, let's take a deep breath and recap the battle plan for this morning. We covered a lot of ground, and I want to make sure we are all on the same page before the opening bell rings. First up, you're watching the NVIDIA fallout. Don't just stare at the chipmaker itself. Look at the infrastructure plays like Vertiv. That is where the real institutional money is hiding right now. Second, keep a close eye on the industrials. We are looking at DIR and GE to see if that supply chain strength is real or just a mirage. Third, we have Rocket Lab. It's coiling up, and if we get that volume spike, it could be the start of a major trend. And fourth, for the risk takers out there, we have VUZI, that speculative sub-$4 breakout play for CES week. Now, before I let you go, I want to give you a little something extra. We didn't have time to do a deep dive on these, but I have 3 bonus stocks on my radar for tomorrow that you should absolutely put on a sticky note. First is Pfizer, PFE. Look, the JP Morgan Healthcare Conference is coming up next week, January 12th. Historically, the big pharma giants start catching a bid the week before the conference as investors position themselves for big announcements. Watch for a pre-conference run-up starting tomorrow. Second, keep an eye on ADP. Why? Because they are literally releasing their non-farm employment change report tomorrow morning at 8:15 a.m. If that number comes in hot, this stock is going to move instantly. It's the purest data play on the board for Wednesday. And finally, number 3 is Target, TGT. We are just starting to get clarity on the post-holiday inventory numbers. If the whispers about a strong December are true, Target is currently undervalued compared to its peers. It's a classic retail recovery play. Remember, the market rewards the prepared, but it punishes the impatient. You don't have to trade everything I mentioned. Pick your spots. Wait for your levels. Let the price come to you. If you found value in this morning's brief, or if you like the new bonus watchlist segment, do me a favor and hit that like button. It It really helps the channel grow and tells YouTube you want more of this content. I'm Iron Financial. I'll see you on the charts. Let's have a green day.
The information provided in this video is for general informational and educational purposes only. It is not intended as professional financial or investment advice. Always seek the advice of a qualified financial advisor with any questions you may have regarding your personal financial situation or investment decisions. The creator is not liable for any errors or omissions, or for any losses or damages you may incur as a result of relying on this content. Past performance is not an indicator of future results. Do your own research.